Hello everyone, this is Jagtar Shergill, insurance broker. Today I'm going to start the new chapter in this YouTube series. So a lot of people ask me to give some guidance about preparing for RIBO Level 1 exam for registered insurance brokers. So, and they ask me about the books and materials and chapter by chapter training or some kind of guidance on this channel. I was very reluctant, but finally, after many people call me through emails, text messages, and personally meeting, and they say I should start it. So today I'm starting the first chapter in RIBO Level 1 practice to give the exam for level 1. So there's many books which the Insurance Brokers Association of Ontario will send you to your home once you register with them online. So this is one big book, Becoming Insurance Broker from IBAO is for. And then there is a second book, Comprehensive Homeowners and Condominium Unit Owner and Tenant Package Policy. So this is the another one. And then third one is Ontario Automobile Policy booklet. And then fourth one is Registered Insurance Brokers Act. And then there's a broker launchpad is a workbook. So all these have different material and different things covered, and you have to go through all this. But I can go one chapter at a time in my each video, and then we will go from there with your views, how you want to proceed. And if you have any question, just give me call or text me. My number is 416-831-0215, or email jagtar@ableinsurance.ca. So please subscribe to my channel if you like to get more benefit from my videos, because more subscribers I have, more encouraged I will be to write more stuff about these videos and give you different topics on YouTube. So let's start with the first chapter of RIBO Level 1 study to prepare for your exam for Level 1 Registered Insurance Broker in Ontario. So first chapter covers many different insurance terms. I will go through today. That's basically is all about. So congratulations, you are joining a very good career, which I always say that this career is just as important and as valuable as any other career, like your doctor, engineers, accountants, like that. But still, it's very easy to get into this career. I feel that it should be a little bit harder for people to get in, because it's easy to get in. Some people don't value this so much. They want to go part-time into it, or somebody want to have it on the side. But this is a full-time career if you want to join in. So you cannot do other job. This has to be your only job when you are joining as a registered insurance broker in Ontario. You can do life insurance as well with this one, but that one you have to get a separate license, because that's a separate material and separate subject. But you can do general insurance and life insurance with in this business, but you cannot do any other job. So let's say start with the insurance. So first thing is, what is insurance? So the insurance, this is undertaking by one person to indemnify another person. So like from one person to pay for the damages, risk covered for those hazards, and that's called insurance. So let's say there were people in long time ago, from 1966 and Great Fire of, I think, London. There was homes, lot of thousands of home got on fire, and the people got together and start helping other people who got their properties lost. From there, financiers and economists got together to build some kind of system where they can charge money from people who are in a group and pay the claims for whom is required, like I said, kind of pool system. So when I say like the undertaking by one person to indemnify another person against a loss or liability for loss in respect of a certain risk or peril to which the object of insurance may be exposed. So in this term, there are so many technical words came: indemnify, hazard, peril, and so let's go in detail about these subjects. What's indemnify means? The action of compensating an insured following the loss under the insurance policy. So like means like action of indemnifying, compensating means paying for the loss. So risk is the danger or chance of financial loss occurring. So risk can be anything like property. We are insuring the home, that is a risk, and a risk can be personal risk like your life, but that comes under life insurance. Like life insurance companies cover persons based on the risk uh, they like to write. And also auto insurance, that's also a risk. Automobile, they insure against the loss of damage or fire and theft or collision, or bodily injury. So that's called risk. Risk is the something which we write. So mostly when we are writing insurance, so a lot of companies or underwriters are asking what is the risk, what kind of risk you are going to write. So now the word came from my mouth, underwriter. Underwriter is the person at insurance company or sometimes or with bigger insurance brokerages who writes insurance policies. When brokers write applications and send it to the insurance companies, then underwriters review those applications. Or sometimes we have in-house underwriters, like in my office we have in-house underwriters. They review and they issue some of the policy, and some of the companies we send them directly the applications, and their underwriters review it and check it. If it meets the guidelines, then they issue the policies. Now the word came from my mouth, guidelines. uh, in auto insurance, property insurance, or liability insurance, is a lot of guidelines we have to follow when we are writing the insurance. So it's not simply like somebody call and you end up writing and they got insurance. We had to see if they fit in certain category, what kind of risk is that, and what it involves, and what's the surroundings and insured person. So many things have to check. Like for example, for auto insurance, you have to check how many claims they have, any tickets, and based on that, and if they have any non-payment cancellation, so and any injury claims, any number of theft claims. So after all the information, then we put it into the system. Is called CompuCode, which is a quoting software with us, with the brokerages, and then it generate the rates based on the all the things we put: claims, convictions, non-payments, gap of insurance, and number of years of license, age of driver, or and same thing for home, age of home and number of square footage, and all those details. And then it shows where it qualifies with which company. Certain companies write certain kind of risks. So that's why the risk is important, what kind of risk you are writing. So, and second, sorry, another one is the peril. The peril is cause of loss. So what if we are covering the risk? Let's say we covering home insurance, we covering the home for damages. What kind of risk we cover, perils we covered for home? Like mostly company covering for water damage, fire damage, earthquake, flood. So these kind of risk company covers, perils they covered. So there's a then there's object of insurance, the item that is insured or covered in an insurance policy, that is object. Automobiles, buildings, contractors liability, all that. So what is indemnity? Indemnity is the contractual obligation by one party to make good the losses suffered by another by putting the insured back in the same financial position they were in at the time the loss occurred. So it's kind of like they cannot pay more than what the loss occurred, or neither they will pay less. So they will pay the uh, amount which is required to bring back to the same condition uh, before the loss. Like for automobile insurance, like if the claim occurs, used car, company will pay for the parts. Maybe sometimes they put the aftermarket parts, and they fix the car back to the condition which was before the claim. So you cannot ask for a 2015 car to put the brand new parts and make it look like 2024. That will not happen. And second thing is, sometimes people their vehicle stolen. I just got the example few days ago. The lady called me that the vehicle was stolen, but now it's found, and the insurance company want to fix the vehicle and give it back to me, but she don't want it. She want the vehicle to be written off. That cannot happen. So the vehicle can be fixed with $5,000-10,000, while the vehicle's value is $50,000. So why insurance company will give 50,000? They will fix it and give it back to the insured. And she was worried about that maybe might be crime was done with this vehicle, or somebody did a crime. So that's when you made the police report that your vehicle was stolen on such date. Anything happened after that is not your responsibility, but as long as you reported it right way once you know that your vehicle was stolen. So that's indemnity. Insured or policyholder. Insured is the person who we insure. Like if you own the home and you are the insured, and policyholder, same thing. Insured, policyholder, applicant is mostly the same thing. So insured is the person who get insurance. You in if you are buying a auto insurance for yourself, or car and home insurance for yourself. In business, when it's incorporated, like limited company or incorporation, then that company is the insured. Then you might be the shareholder or director of the policy, but the insured is that company in case of business, which is incorporated or limited company. So one is the insurer. So that I tell you that this will be the exam question for sure, because I know this is very important. These two terms, insured and insurer. Insured is the policyholder, applicant, like you, if you're holding auto insurance policy or home insurance, you are the insured. Applicant uh, or policyholder, you can say all these things. And insurer, insurer, insurer is the insurance company, the company who give you the claim and who write your policy. That's insurer. So when in legal terms, like in claims, you will see these terms insurer or insured. It's technical terms, but you should know. And in simple ways, when you are explaining to the clients, once you get license, you should know these terms. But once you start, you will be familiar more often. But now, if you're just joining from different careers, never have any experience in insurance, or never know about insurance terms, then these terms must be new for you, and you got to be familiar with insurer, like insurance company. Insured is a policyholder. So then another one is premium. Premium is the payment. Like technical term is premium. In insurance, we said how much premium you pay, but when we talk to the general public in simple language, we say how much payment you make. The payment you make for your auto insurance or home insurance or business or liability insurance, that is that is called premium in insurance. So you got to know that premium. Then principle of indemnity. Like indemnity means what's the principle of paying the claim. The principle of indemnity is a basic rule of insurance. It states that policyholder receives the actual amount of their loss, no more and no less. To pay more than the loss would enable people to profit. To pay less would result in incomplete indemnity or incomplete payment. So, principle of indemnity, the principle of paying claim is that insurance company will pay exactly how much was the loss. So they will not pay anything more or anything less. So anything paying anything more will be encouraging people to make more claims. So they cannot do it. People can misuse the insurance. But if they pay less, that will not be fair to the insureds, policyholders, applicants. That the that is not fair for what they paid for. So they will, policyholders or insureds will get paid for whatever is required. So it's called so there are two kind of risk. One is a speculative risk. One is a pure risk. Speculative risk is like gambling. Like when you gamble, there's a chance of either you lose money or you gain money. But if you lose money, there is no insurance on gambling where you can get your losses covered by insurance company. That's your personal choice. So that's speculative. And second speculative is that business venture. When you are in a business, you open up a business, there can be loss and there can be gain. But if you lose income or lose your money by opening a business and you are not successful in operating it, there is no insurance to cover that. So these two kind of risks are speculative. So speculative risks are not covered by insurance company and they are not covered under insurance. Whereas pure risk is like auto insurance. You buy auto insurance and company pays for damage to your vehicle while you're running, hitting somebody, or you got hit by somebody, and if your vehicle got stolen, these kind of risks are covered under full coverage. Then whereas home insurance, same thing. A company insures your home, they cover you from fire, theft, or vandalism, earthquake and flood, and groundwater, sewer backup, all these stuff. So that is a pure risk. So it's purely determined what can cause and how much can be paid and what's the data behind it. So then so pure risks are covered by an insurance company, not the speculative risks. So another one is term is like main actually, what is a registered insurance broker. Like when you pass your RIBO level 1 exam, and you will become a registered insurance broker once you join the brokerage of your choosing. Once you pass the RIBO level 1 exam, you won't become insurance broker immediately. You will be graduate of level 1 exam. So you can only become insurance broker once you find insurance brokerage, they hire you, and then you can become broker once your sponsorship is sent to RIBO. So and a registered insurance broker work under Registered Insurance Brokers Act, which was enacted by the government of Ontario in 1981, and you had to follow those guidelines, brokers guidelines under that category, under the RIBO. So RIBO is a licensing body where you get the license, and they also monitor your activities, and people, consumers, policyholders, when they are not happy, they can complain against you. And if you are not following the guidelines, you didn't do the insurance properly, and you can be in trouble. So that's why I suggest it's very important to go through the material. I'm just giving you some main points, but you still thoroughly go line by line and get familiarized with the material. This will be helpful even after passing the exam, when you will be actually working in the field, because when you are dealing with the public, giving insurance, giving advice, you have to know your boundaries and limits and what you can say, what you cannot say. So that's very important. And there's a difference between insurance broker and insurance agent. Insurance broker works for uh, the client's interests. So, like, I'm an insurance broker, or once you will pass RIBO Level 1 exam and join the brokerage, you will be an insurance broker. You will be looking at the client's interests. Based on their information, you will find them best rate possible with the companies your brokerage represent. Every brokerage represent different number of companies. Some brokerage have more companies, some have less, and within those pool of companies your brokerage have, you will provide the rates to the clients the best you can. But you are also have responsibility to find good risk for insurance companies. You cannot find fraudulent clients, or who are uh, more inclined towards making claims based on the data, like people who have non-payment cancellations, too many claims, or convictions, or bad credit. So you have to check that, because if you are giving bad clients, or clients with the more chances of claim, then claim ratio of the brokerage goes up. So once the claim ratio goes 50% or 80%, then insurance companies you represent, or your brokerage represent, they come to you and they say that they are not making money from their business. They have to pay more money than what they are getting in premium. They cancel the contract for brokerage. Then we lose the insurance company from our portfolio, where we can write for good people. So it's not good for the other clients who are good and in their company, because you write some clients which shouldn't be there. Because of those clients, the company we lost, and then we lost the clients, and clients has to re shop around again with different brokerages for no fault of their own. So that's why it's responsibility to get a good rates for your clients, and the same time finding good risk for the insurance companies. So, and what's the insurance agent? Like, agents mostly working with State Farm or Allstate, Cooperative, Discharge Insurance, like these companies, they are only working for one insurance company. Like, they are not working for others. So they are not working for the clients, they're working for the insurance companies. So when people call them, they give them that company's rates for auto or home or commercial. Most of them are auto and home, and some commercial, and based on that you choose if you want to go with them or not. Once you become high risk, you have tickets or many claims, then every insurance company have one company is called facility association. So you can write the clients there if they cannot belong to the regular company because of their claims or convictions. I'm talking about auto insurance mostly. So, but if you are a broker like the one you will be studying, then brokerage have many options. We have some mid-range companies, like facility is high risk, where people have no chance of getting insurance anywhere else. Then we put them with the facility association, is mostly with the Nordic insurance, Nordic facility, or Royal Sunline facility, but it's same, just a different underwriting company. And but we also have Jevco insurance, Pefco insurance, uh, and then economical. So they have some high risk market there where we can write. But whereas if you are an agent, you cannot write with those companies. You only have one company representing. Either you write them, or you have to say you cannot write. So agents works for the one company only, whereas brokers work for the clients and representing number of companies and finding the best rates for the clients. So in my personal opinion, being a broker is better and is good for the public and for the clients. Like we are working for them, we are their representative, we are their lawyers, we are their doctors of insurance, which you can say. And then and what's the risk? How many risks are there? There are property risk, like as I said, uh, personal risk, and liability risk. So liability risk is like contractors insurance, like when people are electricians or some other handymans, they are looking for insurance. That's called liability insurance. Mostly they need 2 million liability or 5 million liability based on their work requirement. So that's called liability risk for contractors. Property risk can be the from home insurance or commercial building or business, clothing store or factory, you name it. And personal risk is your health, that comes under life insurance. Automobile is a risk, like car insurance, SUVs, and trucks and planes. So everything that comes under that. It's a vast field. I come across one guy, like at the airport. I met one person, and he asked me, "What are you doing?" I say I do general insurance. I'm RIBO license and do auto and home insurance and commercial trucking insurance. And then I asked him, "What do you do?" And he said, "Yeah, I'm also a insurance broker, but I only specialize in insurance for bigger planes, like planes insurance, aeroplanes, airlines." So see, that's a big how vast this field is. You can do travel insurance, people who going out of country or out of province of Ontario to travel, which makes very little income commission, sometimes $20, sometimes $5. But you can do trucking insurance where you make thousands of dollars. And you can do airline insurance if you have some links there, and where you make hundreds of thousands of dollars from even one client. So it's a vast field. So some brokers, or most brokers, do a little bit of everything: auto, home, commercial insurance, even travel, same as I also do. Even though I love to specialize in commercial trucking and commercial building insurance or contractor insurance, but I don't say no to anything. I write even travel insurance, auto insurance, home, because even travel insurance client who call you for going to US for 7 days trip, maybe you will make $5, but that's the link you make. That person might be a businessman, that might be a homeowner, might be a automobile owner, and when he comes back, he might remember you. He has your number, and he knows that you helped him when he was going back to, or she going to travel somewhere, and then they give you other business. That's how I make client links. So always think of clients first, their needs first, then your needs will be fulfilled once you fulfill their needs. So you have to serve first, then you get, wait for the reward. So don't wait for the reward first, then serve. That won't work. So then there's a risk versus hazards. So risk is, as I told you, the one automobile or home or business. That's the risk insurance companies covers, and hazard is which cause those risks to have claims. So there can be a, like a, for home insurance can be a fire, can be water damage, can be a earthquake, can be flood, can be sewer backup. So that's these are the hazards. And uh, and there's a physical hazard, which is like what kind of building structure is it old building, is they have electrical wiring updated or not, how old is the roof. So based on that, we know what kind of physical hazard there is. So based on these physical hazards, the insurance rates are calculated. So old buildings uh, uh, have more insurance. New homes get a new home discount because there are less chances of going wrong compared to the old homes. And then the other is moral hazards. Moral hazards is the person who's owning those assets. Like when you own the automobile or you own home, what's your credit history? It Statistics shows that people who are well off or who have good jobs don't go for small claims, and they don't go for some fraudulent claims here and there, compared to people who have a bad credit history. So if you somebody is already financially struggling and they get a home insurance claim, and there's many people tell them different ways how to screw up the insurance company or make some fraudulent claims or make some extra money. And so insurance companies, for home insurance, we do when you do the quote, if you give the consent, they do some soft credit check. If your credit is good, mostly insurance rates are good for your home, but if your credit is bad, insurance rates are high. So that's why some people say almost similar homes on similar street, similar age group, and similar professions, and everything same, the rates are much different than the other. And they say why. The exact reason is sometimes credit history of one against the other. So that's a moral hazard. So, and dealing with risk. So how you deal with the risk. So no one actually wants an insurance claim to happen. So losses like fires or flooding are disruptive to home and business owners. And so how you like dealing with it, like for home insurance, for example, you put a fire alarm, or you put some different things there which can protect your home. And same thing for car insurance, you could put a theft device, put there, like for CRV, Honda CRV and Lexus RX 350. Those are high risk and high theft prone vehicles. You will protect those by putting some additional tag system devices. And eliminating risk, only way you can eliminate risk is by selling those assets. Like if you home sell the home, then there's no risk involved. Same thing, you sell the car, there's no risk involved there. So you got to sell it in order to eliminate. But if you have the vehicle, it might be got into accident, might have something happen, so you have to have insurance for those risks. Same thing for home. If you have home or property, you have to have insurance, or your contractor, you have to have insurance. And controlling risk, as I said, taking measure to protect it. And retaining risk, like you can self-insure, like bigger companies like Canadian railways, like or CP Rail, or municipalities, provincial governments, or sometimes they self-insured them. They don't go through insurance. They keep the budget aside to pay for bigger claims, or they put bigger deductible for that. And transferring risk. So sometimes the insurance companies transfer risk by going through different insurance companies, and they become partner. And so each company insures certain portion of risk, so they transfer the risk that way. A reinsurance is that sometimes insurance company cannot cover the risk by themselves, so they have another insurance company who can cover the risk either entirely or for 1 year. So that's how it happens, like facultative risk and treaty risk. So facultative is the, like, where they insure each risk separately. The treaty insurance is where insurance companies send certain portion of their business to reinsurers to stay competitive and stay like able to pay the claims for the rest of the clients. So, and five functions of insurance. So there is spread of risk, like insurance company provide a mechanism in which the losses of the few are shared amongst the many. So that's one reason. And second is basis of credit system. When people buy cars or home or businesses, they get loan. Those mortgage companies, those loan companies, funding companies want insurance on them, so that if something happens, their loan is protected. So like mortgage insurance and vehicle insurance, like when you are buying a vehicle on lease, insurance company or lending company need the confirmation of insurance to release the vehicle. And Another thing is eliminating worry, encouraging entrepreneurship. So when people open the business, so they get insurance. So in case of loss, they are not out of money. They can recover through insurance by paying certain payment for that insurance. And loss prevention and reduction. So you get measure to protect your business or your vehicles. Insurance company gives some ideas, and you also make some preventative measures. More preventative measure you have, sometimes you get more better rates for insurance. So, and source of investment, capital, and employment. So also there are lots of employment in this insurance. We as insurance broker, underwriters, and many people are they are working in this field. And so this is chapter one. So I hope you understand some of the terms I said in this business in this chapter, and explained it. I might not be the perfect person to give you everything in detail, but I tried my best to explain as much as I know. And so make sure go through all those glossary of uh, things. Like deductible is the uh, uh, amount which you pay first before you get a claim. Let's say if the $10,000 insurance claim and there's a 1,000 deductible, and you will get $9,000 in claim money, because 1,000 was like almost like self insurance. So bigger the deductible, less the insurance premium, because you pay more from your pocket. When you get smaller deductible, the bigger insurance, but company has to pay more, and there are more chances of people claiming for insurance because they're not much deductible. And general insurance is, as I say, that's anything other than life and health, like auto, home, commercial property, and liability insurance. We also call property and casualty insurance. So, and hazard I covered already, and indemnity, and then insured and insurer. You have to make sure what's the difference, and moral hazard, and physical hazard, and object insurance, peril. What's the peril? And policy holder. Premium is the payment you make, and principle of indemnity. Insurance company do not pay less or more; they pay exactly what was the damage, and they bring back to the original state your property or your vehicle at the time of loss, not from the when you bought it originally, but from the time of loss. And the pure risk is the one which insurance companies cover, like home and automobile or building, not like gambling or losing money in opening a business. So, registered insurance broker is the insurance broker with the RIBO, and you work for the client's interest and find the best rate possible from the insurance companies you represent. Wherever agent is the one who works for one single company and works for the insurance company, and gives the rates only from that insurance company. And there's a reinsurer, and this is the which insurance company do insurance with different company to cover their risk. And risk retention, self insurance also another thing, where bigger firms like governments, municipal or provincial or company, either self-insured entirely pay the claim from their pocket, or they put bigger deductible of $100,000 or $1 million deductible for claims to be covered. And that's the chapter I was trying to cover in first video of the this training. So this chapter is complete, chapter number one, and there's some review quiz questions you can go through. Like first one is there, like RIBO is an acronym for Registered Insurance Broker of Ontario. Right, RIBO regulates the licensing and professional competence of insurance brokers in Ontario. And for example, speculative risk. So, home that has been damaged by a windstorm is not a speculative risk; it's a pure risk. And building is old and in poor condition. The older electrical wiring caused a small fire last year. This risk is an example of physical hazard. Which of the following statement is not correct? So, like with pure risk, there is a chance of either financial loss and financial gain. That's not a correct statement. The following statement is an example of personal risk, the loss of one's life, as I said in the video. And which of the following is correct? A peril is an event which may cause a loss to occur. That's the correct statement. And physical hazard is the physical characteristic of a risk which may give rise to a loss. The item that is insured or covered by an insurance policy is called object of insurance. In general, when an insurance company indemnifies an insured, it tries to put the insured back into the same financial position they were in at that time the loss occurred. So that's all. So one chapter is complete. I hope you like it and learned something from it and learn from experience. I'll bring more videos on different chapters at other time. So please subscribe to my channel, comment it, and give me feedback so that I can bring more videos on different chapters one by one. It might take some time, but I'll make sure I will try to bring at least one chapter a week so that it will be covered. So go through one chapter one and then go through second chapter when I make another video, and you open up your book too, and then you will learn what we are discussing and prepare for the exam. So thank you very much for watching, and God bless you, and wish you all the best in your preparation for RIBO level 1, and chapter 1 is complete. Thanks. Bye bye.